Well, thank you so much for joining us, and happy Friday to you. I'm Marlon Bowling, your tour guide to the ag commodities. Well, here we are at the end of our trading week, and it has been an adventurous week already. Of course, yesterday we had to absorb weekly export sales data from USDA. We had the quarterly stocks numbers from USDA, the supply and demand report numbers from USDA. We had, what else did we have? We had winter wheat seedings from USDA today. All kinds of stuff that came out. Markets in general on the grains surged ahead after all that data came out at midday yesterday. But then what happened overnight? Well, let's take a look at our corn market and our quotes provided by bar chart just to get a feel for if we had follow through or not in the overnight session. Okay, on the corn, our quotes from bar chart show March was up just a half cent at 671.5. So it didn't do too much. December corn, the new crop month, 5.97 1/4. That was up a penny and a quarter, but it is still languishing under $6. Now on soybeans overnight, here we had the March contract 2 1/4 lower. Now it was higher most of the evening, and then right in the morning hours here, as we got toward the end of the Globex session, it softened up a little bit. So 2 1/4 lower. Last trade was 15.16 1/4, which would put it 12 cents off of its overnight high. November new crop soybeans, well, they also faltered into the morning, and November was down 6 3/4 cents at 13.89.5. So actually quite a bit under that $14 benchmark on the new crop soybeans. Meanwhile, on the wheat, overnight, Chicago March went down a penny and a half at 7.41 1/4, and July was down 3 1/4 cents. Now in Kansas City, March was 4 higher at 8.39, and July was 3.5 cents higher. Checking out Minneapolis wheat overnight, March was down 3/4 cent at 9.11.5, and July was a penny and a half higher. Cotton market, we had a 4-point gain is all overnight on the March contract at 82.08. December was up 57 though at 80.65. I'm joined by Brian Hoops, the president of Midwest Market Solutions. So what a ride we had yesterday in the ag grain complex here after all the USDA data. Now, will things settle down today? Will they reverse what they did yesterday? What do you see happening today?
Yeah, good morning, Marlon. That's the big question I think everybody's asking as we go into a 3-day weekend with no markets until Monday night because of the Martin Luther King Day holiday on Monday. So we'll come back on Tuesday, have the NOPA crush numbers coming out. They're expected to be up from November, but well below last year's record crushes, as we see Argentina crushers buying beans from Brazil. And speaking of, of the crush in Argentina and the crop size there, USDA gave us a glimpse of what they believe is happening down south. They did lower the Argentina soybean crop yesterday by 4 million tons. That's a pretty big drop. And we could certainly fall further than that. They did raise Brazil crop by 1 million tons. So all in all, you combine the two crops and you're looking at something north of 193 million tons. And compared to last year, that's a huge amount. We were at about 173 or 174, I think, off the top of my head, a year ago. So you're looking at a difference of 922 million bushels of soybeans hitting the market from South America that we did not have last year. At some point, that crop is going to hit the markets and undercut U.S. prices, and that's our fear going forward. Is we're getting a push here up above $15 because of the dryness and concerns about the crop in Argentina. But will that last? Even if they have a smaller crop, you're still going to have over 900 million bushels more coming at the marketplace, and that has to be absorbed somewhere. And that's probably going to undercut U.S. exports. It could hurt our crush, and overall, that's going to hurt our demand and increase our ending stocks. So producers holding soybeans and anticipating higher prices, you have to be doing that with ideas that we're going to have a drought in the U.S., and nobody can forecast if that's going to happen at this point in time.
Yeah, it looks like the tide may be shifting there, too. Brian, we'll talk a little livestock when we return in just a moment after a word from our sponsors. We're back with Brian Hoops, and let's talk about our livestock setup for the end of our trading week here. All right, Brian, had on the livestock summary, we had a little bit of light activity out there, but it didn't seem like we really moved too much. Generally, we'll call prices maybe kind of steady with what we had last week. but we'll have to see if we get more market movement here a little later on today. About the only quotes that we saw yesterday for actual transactions on the live basis would have been around 156. Now, we had a wide range on the dress basis yesterday, 250 to 255 per hundredweight there. But from what I understand, the majority of trade yesterday would have been around 252, I believe. So I just wondered how that compares to what you're hearing through your sources out there.
Yeah, it's very similar to what we're hearing, Marlon. It's a steady to even softer market. Some light trade at 156 brings us to that softer level. We may see some more trade today, and I think the feedlot's still holding out for at least steady money. Next week looks similar, but it's probably a little disappointment. We rallied the futures on Monday, anticipating at least $1 gains up into the 157 range, and we haven't seen that so far this week. So it's a little bit of a disappointment. But you look at steer weights that came down sharply yesterday, and that's a very encouraging sign for the cash going forward. We do expect to see strength in the cash markets into really next week and the week beyond as packers increase their kills a little bit and these weights are coming down. So we're certainly looking for some additional strength in the cash markets, and that should be supportive to the futures as well.
So the markets are closed Monday for MLK Day, but are the packing plants shut down, or is it a normal day?
Yeah, I think they're probably going to be at a normal day for most of them. There may be some floating holidays that limit some of the slaughter kills, but I think it'll be probably lighter than usual, but it will be more than, say, like a Christmas holiday or New Year's holiday.
Well, let's take a look at how we finished up yesterday in our futures trade. These quotes from bar chart show February live cattle were down 20 yesterday. April were down 40 at 160.92 per hundredweight. On the feeder cattle side, we had the March contract down $1.27 yesterday at 184.27. Of course, that big rally in the corn after the reports came out probably weighed on the feeders. And on lean hogs, February had another down day. They were down 55 at 78.75, and April was down 122 at 87.17. Brian, great to talk with you, and have a good weekend out there and a long holiday weekend. We'll talk with you next week. Brian Hoops of Midwest Market Solutions. So, Suzanne, the table is set. We're ready to start trading at the bottom of the hour.